Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, I didn't get the Spotify ready here. Let me start that. I always forget about that part. Well, guys, it's Tuesday. Again, we got some big numbers coming up this week, like CPI and so forth. We do have some Fed speak today. But yesterday, I would say was fairly uneventful. Let's come over to the charts really quickly. I've got a bunch of Twitter flashing over in the corner of my eye. So here you can see the treasuries. Now that was very interesting. So yesterday there was a little bit of a buy, but here overnight, really strong upside action you're seeing here in the treasuries. It really looks like that the near term forces are all of a sudden long. Hold on a second. I think that my audio might be a little bit messed up here. I'll fix that in a second. Anyways, now when you look at the S&P 500, they are to the downside. So it may be that some of this upside in treasuries is just risk-off sentiment. Things in China not quite going as well as people would hope. Continues to disappoint based compared to economists' projections. We got oil taking a pretty big plunge this morning. Gold and silver also coming down, and copper coming. Man, everything is down. Is anything up? Bonds, well, except for treasuries. Okay, and we are, by the way, about to get some U.S. trade balance. So not a huge one. I'm going to continue through here. Bitcoin doing a little rise. That's kind of curious. Everything else is down, but Bitcoin is rising. The dollar is rising 102.45. Very interesting. Now, my camera is not fully charged, so it might die here. In fact, I'm kind of thinking maybe we turn it off here for like 30 minutes, if that's okay with you guys, and just keep it off for a little bit. And go here to the basic screen. Banking names lag after an Italian windfall fat tax. Risk zone hit by Chinese trade and reports around a property developer. I'm trying to find an explanation for why the treasuries were the overnight move was so strong, but I'm not really getting a good answer. We're gonna see 112 today. I mean, that's kind of where they're headed. Back to 112. Let's see what's on zero hedge. Excesses exist currently that have never historically occurred. Okay. China exports unexpectedly plunged the most since COVID as economic slump accelerates. Groundhog Day from yesterday. What do you mean? I guess the 5-year did finally, you know, push up through that massive order you'd been talking about. Short covering. It could be. Although, here's the question though. If it's short covering, why did it only start to occur so strongly last night? Right? I think there's more to it. I mean, yes, short covering might be exacerbating the move, but I think that there is some risk off sentiment coming through here, right? I'm having a little difficult time focusing here today, so my contacts are really, really old that I have in right now, and I think that they're too old. And I ran out of contacts, so maybe I should be switching to my glasses. If I switch to my glasses, though, I can't really wear the headphones, so I don't know. Do you use order flow or just DOM only? Okay, so that would be kind of a misnomer. So what happens is that people trying to promote their products and so on and so forth will try and attach themselves to words to give themselves more credibility. So there is a lot of stuff out there that is marketed as quote unquote order flow that is really just technical analysis. Okay. So what is order flow? Order flow is the study of the orders in the market when informed with the depth of market. Okay. That means you're looking at price and volume, but you also have the depth of market, and that allows you to do things like sign a order, meaning it was that market order a market buy or a market sell. I can tell based on what the best bid, best offer was, for instance, right? I can see orders, limit orders adding and not getting filled. I can see limit orders canceling. These sorts of things, right? That is what order flow is, okay? The DOM is simply a tool that shows you order flow live, okay? So the DOM will give you the most granular and complete view of the order flow, okay? So I think some people try and present order flow as like there's the DOM and then there's like the footprint chart or something like that. That's kind of I think a silly use of the language, right? Okay. So how does Seth trade? Well, so the way that Seth trades is that he utilizes informational inefficiencies, things that I know about the market based on reading analyst reports and knowing what types of things move orders, and I try and predict what the order flows will be. And if I know what the order flows will be, I'm able to utilize the stylized behaviors of order flow that we know from research to be able to predict to a pretty high degree of accuracy how a move will play out. So we're utilizing the DOM and everything that there is that you can gain from the DOM, but the primary edge is going to come from informational imbalances, essentially. Or asymmetries, that's the word I'm looking for. Informational asymmetries. That's why here we're talking with Octavius. Okay, so we're trying to figure out what's driving this buying. Because we got pretty strong overnight move. That's what's one of the strongest overnight buys we've seen in quite several months, in fact, I would say. So why is it that the Europeans and the Asians are all of a sudden buying really aggressively? Well, so we can look at maybe what are some of the pieces of news overnight. The Chinese export data wasn't very good. Then on top of that, we know from positioning that the market has been like crazy short the treasuries. So we think that what's happening is this risk-off sentiment is creating more short covering. Right? Now, we come in and we're going to look. We do have Fed's Barkin speaking, although I haven't heard too much from that. We do have 3-year note auction today. So we are going to get some supply into the market, and we are concerned about the supply pushing us down. But for now, it seems that these risk-off and short covering flows are much more powerful. I just have a problem with NinjaTrader when you use their order footprint. I have to pay for a lifetime license. Well, okay, so NinjaTrader. So you can use NinjaTrader for free if you don't submit any orders through NinjaTrader. So that's the first thing. The version of NinjaTrader that I am using is actually the free version. I have, wrong screen. I'm going to go to this one. I actually have a full NinjaTrader license, but it only works with NinjaTrader brokerage, and I'm not using that brokerage right now. So don't use my developer license that they gave me. If you plan on submitting orders through NinjaTrader, basically you should get the lifetime license, right? If you're doing something like similar to what I am, where you're using NinjaTrader for charts and you're using Jigsaw Daytrader for your execution, and you're already paying for the Jigsaw Daytrader live trading license, then you don't have to buy it. And there are free footprints out there. Like if you go and you search, especially if you're a Futures IO member, there are more than one footprint out there for NinjaTrader, aside from the order flow one that comes with the lifetime license. I just want to analyze and trade on empty. Oh no. If there's any platform that I would recommend against, it's MT4. it's MetaTrader. Yeah, the MetaTrader is really kind of like this is really geared towards the Forex audience, and I feel like it's kind of a grift. Like they have this whole app store built into it that has all of these robot algorithms you can buy that are complete nonsense. Yeah, I'm not a huge fan of the MetaTrader platform, but. So if you're starting out, the first question that you really got, I mean, the platform and all of that sort of stuff definitely matters, right? But it's getting a little bit ahead, right? Because the key thing is where is my edge actually going to come from? So there's this idea out there that you can just watch what other people are doing and make all of your decisions based on that. It's nonsense. What ends up happening is every order is important. Orders have a much stronger impact than you would think. Almost 5 to 8 times. But when I say 5 to 8 times, the reason I say that, they did this study that got released in fall of 2020, and these guys basically looked at the market and they said, okay, if you put $1 into the stock market, how does that change the total capitalization of the stock market? And they found that both from a theoretical and an empirical standpoint, that you would think it would be $1, but it was actually $5 to $8. Okay. So what that means is orders have a very strong impact on prices. You might not be able to notice that impact when it's just your one lot, but even your one lot has a stronger impact than you realize. And what that means is that when you see an inefficiency in the market, particularly like a statistical one, like you're watching what other people are doing and you're noticing some sort of a pattern in what they're doing, when you try and trade on that, it's going to have an impact on the market, especially if you're becoming profitable and you're sizing up and all of these sorts of things, right? And as you trade on it, you're going to move prices and remove that inefficiency from the market. So the result is the market ends up becoming extremely statistically efficient. So just trying to watch what other people are doing ends up being not really very effective on its own. Okay, but the split side of that is that because all orders have impact, even orders that are completely random, like somebody just feels like buying a ton, can happen, or maybe it's an index fund, they have to rebalance at the end of the month. So their orders, they have absolutely nothing to do with the fundamental state of the economy. There's no informational content behind their orders at all, still moves it, right? Because all orders have an impact and their impact is very, very strong. And so that means that price is not really very reflective of all available information. We think that, oh, this price should reflect the fundamentals. And, when we get out to like a daily time frame, it reflects that very well. It's not true at all. Prices can become very, very far away from what fair value would be, and they can stay there for a very, very extended period of time. And so what that means is that like informational inefficiencies are literally everywhere. They're just all over the place all the time. So that's why I recommend that people try to utilize the things that they know about the market to try and assist their trading. So especially if you're going into a market and you know something about that market that the average person doesn't. Like you worked in the oil industry for several years. Like go trade oil. You're going to know things that other people don't about how the oil business functions that can give you an advantage, right? Once you have that sort of stuff down, you're reading news, you're reading analyst reports, all of these sorts of things, right? Then you can kind of come back over here into the order flow and say, okay, when I see a buy like this, if I think that they're going to buy, how are they going to do that? Based on who it is, how much they need to buy, what the overall conditions in the market are. You can actually make very accurate predictions about how this is going to play out, right? Wow. What? I just saw that message from Keller. What is IDAI? Is that a stock? Yeah. Anyways, so now that you've kind of got like the where is the most fertile ground for edge as a retail trader, then we can kind of talk about platforms, right? Because a lot of it depends on which instrument you're actually going to trade. Okay. So I think that if you're going to come and trade futures, you want to trade ES, Xeon, any of those, the DOM is the best way to look at what you're look at what you're doing. And it's definitely the best way to execute, right? So that's why I use Jigsaw Day Trader, because it has the best DOM, right? Now, if you're in maybe a slower market, like let's say you're trading wheat or something like that, the DOM might not be as important. You still want to have tools that allow you to see the order flow, but having a strong DOM might not be important. So NinjaTrader has a DOM, but it doesn't have a very good one. The one that comes with it kind of sucks. Okay. But for entering orders, gets the job done, right? So you can get the lifetime license, use their order flow charts and to kind of figure out what's going on and execute on their crappy DOM. Totally works, right? That's $1,000. Okay. What are some of your other choices? Okay, one other choice that you have is Iron Beam. Iron Beam is really easy to get started as a beginner. They have a phone application. It's all like completely in the cloud, and it has a functioning DOM that works really, really well as well. So that's a really easy one to get started with. And that's like you get a free platform. Another one is Quant Tower. So a bunch of different brokers have like their own version of Quant Tower. Like if you go to Optimus Futures, they have Optimus Flow, I think is what it's called. And it's Quant Tower rebranded for them, right? And you get that platform free with the broker. and that has a pretty decent DOM that gets the job done, right? If you want to go more towards having a strong DOM, it's Jigsaw, and then my second choice would be Sierra Charts. Sierra Charts is a little bit cheaper, but you do, once you're paying for their proprietary data and everything, it comes out to pretty close to the same amount for costs, right? So, you'll notice that a lot of the discussion around what platform you're going to use also depends very heavily on which broker you're going to use, right? So really the first thing that you want to do is, if you have a platform that you're absolutely dedicated to, like it's NinjaTrader, then you're going to use NinjaTrader brokerage, right? But if you're not so attached to a platform, then what you might want to do is go shopping for a broker and find which broker you like the best and get a demo with that broker instead. And that's how I'd go about it. I have a question. When DCAing, do you think it is a better general idea to buy and lower your average and try to sell the whole position at a profit, or is it better to treat the second position as a brand new separate position? Okay, so when we're talking about like sizing, okay, because this comes into some of the bizarre things about risk management, okay. So the most profitable way to do things will always be all in, all out. Assuming you get a good price, right? So the purpose of legging in, well, not the purpose, but something that happens from legging in is that it kind of allows you to take on more risk to some extent, right? Because you can buy one contract, it goes against you. You can buy another contract, and then if it mean reverts and it comes back up, you've lowered your position, right? But in doing that, you're taking on more risk, because if it continues to go down, you're going to lose more money than you otherwise would, right? But the weird thing that happens with risk is the more risk you take on, the more likely you are to win, right? It's just that the more likely you are to blow up as well, like completely blow the account, okay? So that's where the problem comes in with sizing, okay? Now, the reason why you size as a professional is that you just can't get all of the contracts that you need all in, all out, especially if you need to buy 30,000 contracts. You can't just, you have to split it up, right? You split it up so that the market doesn't notice you, right? So really what you have to think about is, like, what is my overall risk that I'm willing to take on a trade, and what is the attending reward that I'm trying to go for, right? I like to keep it equal risk reward. So if I'm averaging in, I still have a dollar amount that is the maximum dollar amount that I'm willing to lose, and then I want on my winner to make the same amount on the other side. And that just works best, especially if you're new, in terms of like being able to receive good feedback from the market. Because if you're always averaging in and taking on a lot more risk over, you're going to find that you tend to win a lot. But it's not necessarily because you're making good decisions. It's just because you're taking on a lot of risk, right? So, and we as people have a hard time dealing with that. When you win in the stock market all the time, your tendency as a person is to think that you're a genius or a god or something like that, and it really goes to your head. And you get a lot of these people that they've only been trading for a year, and they develop really huge egos because they're getting high win rates from taking on a lot of risk, right? But you don't actually learn from that, because eventually, the drawdown comes, and they've never dealt with it before. The strategy that they're using, there isn't actually anything to it. It's just the risk taking, and all they know how to do is take on more risk, and then they blow the account, right? IDAI is a stock company called T-Stamp. They had their patent approved for some kind of end user privacy protection tech. That's good. Wow, but you say it tripled. I was gonna pull up the chart here. Stamp. It's on the NASDAQ. Oh, I see. So did you take profits on it? Ooh, that is a weird chart, man. That is a really weird chart. I haven't seen one like that in a while. Because what you're seeing happening here is it looks like it was a really big stock during the 2021 bull run, and it's kind of this looks like a retail favorite, yeah. Because what you're seeing happening is like anytime that there is like a good news release for them, there's a big spike up, but then it very quickly comes back, right? So if you caught it down here at 0.7, and now you're at like let's say $2, then, you know, not saying that it's not going to go up higher, but you have to think about how you want to manage that, right? How you manage the winner is a big deal. You know, this is the same thing with the I mean, this is a penny stock, but the penny stock that I've been playing with, right? You know, I got it way back here, like before COVID even. So I think I got it when it was like 0.45 or something like that. I think I got it like down in here before this jump, right? There was a point where it was worth $4. So there was a point at which I was up 8x, right? But I didn't take profits, and it almost all came back, and now I'm back up double. Now, I'm holding that because I really believe in their mission. The mission of this company is to create a more sustainable refining process for refining rare earth elements and having a mine in the United States. So this is basically like the only rare element mine in the United States. And so the reason why this kind of jumped up over here initially was because there was headlines about China restricting the export of rare earth minerals, right? And then there was another story about late last week about them getting a permit, a certain key permit that they needed. So that's why it went up. But, you know, if that ends up becoming a thing, their mine works out. They are able to pass all of the regulatory hurdles, which it looks like the government is cooperating, then I think this will be worth a lot more than $4. So this is why I held on to it. Oh yeah, I took profits on the other one. Okay, cool. I can feel the contacts in my eyes. I'm really tempted. I'm gonna try and ignore it for a little bit longer, but I'm really tempted to just go and switch to my glasses. It doesn't bother me too much. I can definitely feel them. Parker is still speaking. I minimize that for a second because there's a couple of other stocks I'd like to take a look at today. But when you're looking at the Xeon right here, right? So of course we did have a pretty strong move up overnight. When we look at this market right now, they are actually ranging between two prices and kind of consolidating a little bit. So this does not look like a very like the best trading range. I hope I keep going back to that one. We need to do that. So thinking back to Keller's question, another thing that you need to realize is that the market doesn't really know nor care how much money you're making or losing, right? So like the idea that because the stock came back and you're at break even, it is an edge for you to get out of the position. It doesn't really work that way, right? That you are break even again tells you nothing about whether the future order flows will be long or short, right? Okay, so the main platform that I'm using is called Jigsaw Day Trader. So if you go to Jigsaw Trading, I have an affiliate link in the video description below. And that platform, by the way, does have footprint charts. Let me show you the footprint charts. So there are a couple of like, what do we say? There's a couple of indicators that I really rely upon in my own trading that Jigsaw doesn't have, and that's why I continue to use the NinjaTrader platform. Let's see here. Hold on a second. Footprints. Sorry, I use NinjaTrader because I have some custom indicators, but Jigsaw does have charts now, and they're not too shabby. Let's see if I loaded things correctly here. I don't think I actually. Oh, no, I didn't. Okay, so that's their default footprint. They do it as a diagonal thing because, you know, this is what the bid and the offer was at that price. I'm not a huge fan of the way that displays, but you can come in and you can change it, right? Which one is it? It's tilt mode, and you just turn off tilt mode. Apply. There you go. Now you got a traditional footprint. Histogram style. I can choose to do delta so that I can see, you know, the imbalance more clearly. Histogram scope. Nah, I would probably leave it like that. So that's your footprint. Okay, so why do I use indicators? I'll tell you. So hold on, the news squawk is talking in my ear. So when I say indicator, all I mean is a calculation that's being done. Okay. Calculation that's being done from the market data. So if I come over here to a chart, okay. So typical approach to an indicator would be like this moving average that I have on here. So this is a super smoother moving average, and basically what it does is it tries to filter out noise from the market so that you can try and get a better, clearer picture of what the trend is. And a lot of people will try and do things like, okay, if the moving average is rising, then I want to go long, and if the moving average is falling, then I want to go short. And the problem with this is that, as you pointed out, moving average can be a little bit slow, right? Because what you're doing is you're averaging together data points. That means that the actual signals that you're going to get are going to be late, right? So those are indicators that are averaging things, right? Okay. Now there are some things to kind of deal with some of those issues. The super smoother is one of the indicators that kind of does those sort of things. If you put an SMA, you would see the SMA is really, really, really late. Okay. But that's not the only kind of indicator that you can do out there. For instance, over here on my treasuries. So what am I looking at? What are the things that I've added here? Well, the one down at the bottom, and this is one of the most important ones for me. This indicator down at the bottom, what is this indicator? It's the spread. It's telling me the difference in movement between the 2-year and the 10-year, right? This is that spread that everybody says, when the 2 and 10 year spread gets inverted for a certain amount of time, that means that we're likely to have a recession, right? This is telling me what the yield curve is doing. So it's not an indicator in the same sense that a moving average is an indicator, right? But it is a calculation that is done through an indicator object on the chart, right? So there's no spread indicator in Jigsaw. So that's why I still use NinjaTrader. At some point, I think that they are going to add one, and then I might switch to just only using Jigsaw, right? Another indicator they have on here, and NinjaTrader, a lot of other platforms have this, but Cumulative Delta. So what is Cumulative Delta? Cumulative Delta is all buys minus all sells. So because we know what the best bid and the best offer is, we can determine whether a market order was a market buy or a market sell. We call that the sign of the order. So we can sign the orders and determine if there's an imbalance between the market buys and the market sells. So right now, when I look at this, I'd say it's pretty disorganized, right? What I like to see, the kind of market that I want to get involved in, is where Cumulative Delta is just consistently going in one direction. Like if we come back here and we look at a previous day, let me like really zoom back in here. Okay, like here's a pretty decent example. Okay. Cumulative Delta pretty consistently to the long side, and Cumulative Delta matching up with what the market is doing in the end, right? That's the kind of market that I'm looking for. That's, and I want to get in before this happens. I want to get in somewhere in here. And the way that I do that is I know why they're going to trade. And I know that order flow is coming before it actually happens, right? So I do not use indicators in terms of like, when we cross this line and all of these conditions are met, and then again, that's nonsense, because none of that has anything to do with why other traders are going to submit orders. I mean, some people are looking at the charts, but like that's a crapshoot because they all react to each other and it's constantly changing and evolving. So don't use patterns, don't use technical analysis, any of that, right? But there is lots of things that I want to see about the current conditions. Right? I'll show you one more, and this one's really important because I have an indicator suite, right? You can download these indicators and use them at speculatorslet.com. But another one that's really important, dollar index. Okay, how are you trading without knowing what the value of the currency that you're trading in is doing? Right? So in order to get the dollar index trades on ICE. There's futures for the dollar index, right? But yeah, that's expensive. ICE data is expensive. So what I do instead is I calculate that dollar index by looking at all of the FX futures. There's Forex futures on the CME, and I use those to calculate what the dollar index is. Then I can get dollar index data for free. You would think that this one would actually be like a really simple thing, but it actually ends up being really complicated. I have a lot of features in that one. So yeah. So that's why I was saying, like, there are a couple of indicators that I feel like are missing from most platforms that I use. It's funny that you mentioned the whole getting out at break even might not be the best idea, because I've heard quite a few people saying that recently. It seems to be where the mind of the market is at. Yeah, because I can't tell you how many times I will see something like, okay, so like think about the square root law. So some of you guys that are new might not completely know what I'm talking about. Just kind of stick with me. But for those of you guys that have been around for a while, okay, square root law is that the impact of a meta order scales with the size of the meta order in a square root law. So there's y omega times the square root of the size of the meta order over the volume, right? Okay. And it looks like this. Okay. And then when the meta order ends, there is a 3/5 law. Oops. That's something like this. Okay. So think about this for a second. Okay. You might not notice that something's going on until we're really starting to get going, like right here. Especially if you weren't anticipating it, right? By the time it's clear that the order flows are going in a certain direction, you're going to get in here, right? It's going to get up to here. Here's your profit. And then when the meta order ends, the 3/5 law, and what does it do? It comes right back to your break-even point, right? And then if there's another leg, so what happened? You got out, before the next leg comes. So that's why the whole thing is what will happen is we'll project onto the market. You have to realize that the market doesn't care about you. Okay, it cares about your orders, but it doesn't care about you. It doesn't know that you're at break even, right? So really what you need to determine is, like, should I get out of a position? Should I manage it, etc., etc.? Well, it all depends on what the future orders are going to be, right? If I don't have any good information, like I didn't know that it was going to come in to begin with, and I think that the reason that maybe that buying was in there was kind of selling and probably isn't going to drive too many orders, right? Then, there's a good chance that it just does this for the rest of the day, At that point, you might as well just get out because you're not going to make any money from it. You're just holding a position on there for no reason, right? All depends on what the future orders are going to be. But if I think that, it was a non-farms payroll, it was an important number, and that there's going to continue to be orders, or like it was on Friday, I know that the market positioning is really extreme and that everybody is short and you're going to see a lot of short covering, right? Then I want to buy it for that second leg. And hey, guess what? They did kind of do that on that day, right? That was the Friday. So there was a number of points here where you kind of thought, maybe it's done. And then they kept going. Because if there is a meta order, here's the chart. There's a number of points where it kind of pulled back a little bit and kept going. But, in order for these guys to execute the number of orders that they need, they're going to push the market. And it's going to take them all day to do it, right? In that situation. Do you also, yeah. So I'm not going to be taking a position at the moment. But, we're kind of on the lookout. I don't take a trade every day, is what I would say. 7:10. Let's try turning the camera on and see how much battery we've got now. That's a little bit better. I think that should be able to last us until the end of the stream. I'm still bothered. I don't know if it's like my cam link is broken or something, but like the frame rate that I get on the camera is not as good as like what I see on the camera screen. It really bothers me. Sure, you can. You can't know what future orders are going to do any more than you can read the future and know what will happen in any event whatsoever. You can make an educated guess and you can get quite good at it. Right? There are absolutely some situations where you can predict future orders. And there are things, I mean, this is a developing area of research, but there are things out there that we have a pretty good idea are correlated with future orders. I'm 23. I'm learning IT. Well, why not, Lucas? It's certainly not something that you can do every day. It seems to me that it's not something that I can do every day. But it is something that I can do every month. On that point, though, I didn't have anything, like we were saying, okay, there's some risk off sentiment. There's some short covering. I didn't really have anything to really strongly suggest to me that the orders were going to be one way or the other today. So far we've kind of moved to the downside. I'm looking at this at the bottom and I'm like a little bit surprised because it seems a little bit aggressive, but then I look at the chart and it looks to me like things are mostly just kind of still in a ranging. I'm not seeing a strong meta order, so this looks like more like random action to me. Well, I don't really need any assistance. Plus, I don't really, the stream makes some money, and I save that and reinvest it back into the stream, but the stream does not make enough money to pay employees, unfortunately. I would love to have employees. One of the things that bothers me is that, like, I want to do some things like maybe run a fund or run a small business, and I don't have very much experience in doing those things, and I feel like I'm behind. Like, I'm a little bit old to be starting to do those things. Assist you for free? Well, so the way that another thing that I would say is that we kind of approach this together, right? What we do is we come in and we kind of share the information that we have. Like, you could see, like what I was doing with Octavius at the beginning of the stream was a really great example of how we function, right? So we're kind of debating a little bit about what we think are the dominant flows in that market that day and why, right? The thing that you got to remember is that those informational asymmetries are just everywhere, right? They're so abundant that it almost becomes impossible for us to sort them out between each other, right? But every once in a while, one will come along that is just so dominant that it'll just keep going. Friday was one of those days. I was not on the ball on Friday. I hope that some of you guys made money, because that was totally a situation where we as retail traders should have been able to sort out what was going on, and I just didn't. And that was kind of more on me than it was not having the information to be able to make that decision, right? Is there any order flow, footprint, DOM tools for free or anything? Well, so yes and no. Okay, so I mentioned like Quant Tower basically gives you the tools for free. Iron Beam basically gives you the tools for free. But in order to trade on the CME, you have to pay their data fees. So there's no free way to really trade futures. I mean, you take in between that where we're not, right? I'm about 50-50 though, Lucas. Like my win rate is closer to 50-50, so like that's the thing is the way that it works out statistically, ends up working out statistically, if you're trading well, is you're gonna hit a win rate that's slightly below 50%, but your winners are gonna really go, right? So that's where the asymmetry will come in, right? Is it normally, I would say, if I have equal risk reward, that I'll get 50%, right? And then if I want to go for winners that are 1.5 times my losers, I'm going to get more like 30 to 40%, right? It's actually the way that you can sort it out is 1 over 1 plus x equals 0.4, for instance. Or we could say 1 over 1 plus 1.5 equals 1 over 2.5. Right? Pull out a calculator. 1 divided by 2.5 equals 0.4. Right? So if you come in here and you're saying, my winners are 1.5 times my losers, but I'm winning 45% of the time, then guess what? You're profitable. How many retail traders talk about making money? It seems to be a lot more common, and I think that this is just kind of because it's a trap that people fall into, that people take losers that are larger than their winners. But well, the difference here is that there's you can have an actual edge, right? Now, the issue is that because the edge changes every day, every situation, right? If you have a technical edge, assuming that like the rest of the market doesn't catch on to it, right? You should be able to be consistent with it. But that's not the case with what we do, because it's discretionary and it depends very much on how well you understand that market. %. So to this larger thing, Keller, it seems to me like something weird is going on in the economy. I know this is being a little bit ADHD, but segue for just a second, okay? I like to buy and sell things on like my local classified ads. I might not always be buying things, but I'll always have like items that I'm searching for. It used to be, so like one of the things that I'm interested in getting is a Garmin Instinct watch, because I want to see, if you get like the monitoring and stuff, what it might tell me, if that would be useful for me or not. Relatively cheap for me to get one of these, okay? So it used to be, I would go and look up for an item like that, and if I saw one, I probably needed to message them before the end of the day or it was going to be gone if it was a good listing, right? But these days, they will stay up for weeks and weeks and weeks. And the listings that I put up, I don't get nearly as many views on them as I used to. I don't get nearly as many. It used to be I'd put something up and I would get inquiries before the end of the day. And now it's like I might not get any inquiries for 2 weeks. Like something's changed. I saw a TikTok the other day. This person was saying, that they've worked in the restaurant industry for over 10 years, and this summer has been the worst summer for them that they've ever had. They have way less customers, and when the customers do come in, they don't tip very much. Meanwhile, when you look at the stock market, you wouldn't know it, would you? Right? Like the retail favorites have been taking off recently. There's like meme stocks are back. You can look at this, I would have to go and find the zero hedge story, but that Goldman Sachs has this index of like retail favorites. The retail favorites have just been taken off, right? It kind of feels to me, just from the anecdotal evidence that I have access to, that the economy is turning and the stock market is still at excess. So like consumers are pulling back really heavily. Like all of a sudden, they've just gotten to a point where they just feel that they cannot handle the credit anymore and are completely pulling back on all purchases at the very same time that the stock market has decided to go full bore into things. So I find that a little concerning. That's something that really has me the last 3 days or so really feeling like, people have kind of declared the recession scenario dead, but it looks more, to me, it looks more alive than ever, That's why I said a stop. Yeah, well, the thing that I would say to you on this one, because you've already been through this once, right? So learn from it last time around, is that it doesn't matter how much you make, it's what you keep, right? You're getting the pops right now. The market is going to flip around soon where, those kind of gappers and those sorts of things don't work anymore. And you'll take bet after bet after bet and they just not work out, right? And in that situation, the best thing that you can do as a trader is just walk away. Like, just don't even trade it. Go short, or just, if you're good at getting it short, then go short. Otherwise, like, just don't even trade it. Right? Makes sense. Every strategy that I've ever looked at, like technical strategy that I've back tested, will go through a drawdown, like a hefty drawdown. And there are some times where I can see that the drawdown is just like periods of volatility. So it's like, okay, what do you do when you come into a period of volatility? Do you switch around to a different strategy? And in every instance, the best thing to do was to just tell the algorithm to not trade. So, and it's the same thing over here on the discretionary side, right? How am I able to do that? How am I able to do like a 1.5 risk reward and still get a higher than 40% win rate? Well, it's because I have an edge. It's because I only take a trade when I have a piece of information that really strongly suggests to me which way the flows are going to be. Now, in order to pull that off, you can't trade when you don't know, right? If you don't have that explicit edge, I just stay out. And I know that's not the most fun thing for the stream. I think that the stream would probably be a lot more popular if I had some technical strategy and I just was full bore into that and then, you know, acted a little crazy. I'm sure that I could probably get a lot more viewers, right? But I'm only interested in trading when I have an edge. Right now in this market, this looks to me very much like a market where I don't really have a very strong edge. Say a 6K bid, flashing at different prices and then pulling. Is that on ZF? I don't see anything like that in Xeon. There's a big order down at 12 though. You know, another thing that I would say is that like my win rate that I get, it has more to do with the natural oscillation of the market than it is like how often am I right. It's actually come out over the last year. I'm probably right more like 60 or 70% of the time. But a lot of the time you end up getting a bad price and it kind of goes against you for a little bit more. You know, if I was willing to come in here and hold like a really huge stop, I could probably be profitable every trade, you know? If I was willing to take on more risk per contract, then I would probably have a much higher win rate. Like similar stats, but a slightly higher win rate. I mean, like the parameters that I hold are good for like your standard market, but the treasury market has been more volatile than that lately, right? I've definitely had a number of situations where I really had a good spot, a really good position, and, you know, for whatever reason, I just couldn't stay in it long enough for it to come out and you really get the winner. Or because, you know, it went after my trading session. That happens a lot too. So I guess what I'm saying is that if one of you that was able to, you know, do this all day, might have more success with it. I think there's another advantage to the way that I do things too, though. I mean, not only do I think that there is more edge available and it's easier for you to find that edge than all of the technical stuff that people go after, but the other advantage to it is that you understand more. I do not think that futures trading is a very good way to build wealth for most people. There's always going to be that person that gets lucky and does really, really well with it. Okay. But for most people, you're going to lose money from futures trading. If you are successful with it, it's going to take a really, really long time for you to be successful with it. It's not necessarily worth all of the effort that you put in, right? Okay. But if you're trading the way that I talk about, you're going to learn a lot about the market. Because you're looking at the market from like the most granular level. You're keeping track of everything that's going on. You're gaining a lot of wisdom and experience as you do so, right? You're just learning a lot about the market and the economy. And those things will filter through into the rest of your life, right? At your day job, you're going to make better decisions at your day job. You're going to be able to make better decisions about how to manage your career because you understand things about the economy and the business, right? You're going to make better decisions about, what to do with your house, what to do with your monthly expenses. So what are things that are worth spending money on and aren't worth spending money on, right? Like it will filter through into every other part of your life. And so it may be that you take a little loss on the futures or you're just trading at sim, but the amount that you make or save from the other parts of your life totally make up for it, right? That's another thing. And if you're trading pure technical analysis, right, you don't get any of that, because if you're trading pure technical analysis, you have no clue what's going on. You don't know why it's moving. You don't care why it's moving. You just you believe for whatever reason that there's that following this pattern will result in profits for you. And technical analysis essentially becomes a practice in like how stubborn can I stick to that pattern, right? And if you're really good at that, then I sure as well hope that there actually is some edge to it, because if there's not, your losses are going to be even worse on the downside because you're so stubborn, right? Still hearing stuff from Barkin, by the way. I don't know if that downside that we saw in the treasuries from like 19 to 16 was because of him, but it's a good guess that it would be. Oh, okay, here's the S&P 500. So I'm just reading here on Zero Hedge, the U.S. market open from News Squawk got posted, and their brief summary was risk sentiment floundered on a trifecta dismal Chinese trade data, Moody's downgrade of U.S. banks, and a shock windfall tax imposed on Italian banks. So those three things together seems to be what's souring the mood in equities. I would still say that right now the flows are a little unclear. When I look at the 30-year, I can see a pretty clear sell off of that decline from the top of the hour, but really hasn't done a whole lot interesting since then. Oh, futures trader is on vacation today again. Yeah. Nick Timmeros, manufacturing nations are running up against a generational problem. Younger workers, better educated than their parents, and veterans of Instagram, TikTok, and other social media are deciding that their work lives shouldn't unfold inside factory walls. Oh yes, MBO. So, first of all, Walter, haven't you asked me about MBO before? But I'll explain it. Okay. When I'm looking at my depth of market, the way that it works is it says there are 900 orders at 16. And then I'll get another update that says there are 1,100 orders at 16. Okay. So if I am at the back of that queue, okay, I can assume that all of those orders that just added are behind me. Okay. Now it goes down and it says there's only 800 orders in queue. How do I know where I'm at? How many of those orders that pulled were behind me and how many of them were in front of me? Right? Well, you can kind of estimate based on where you are in the queue, what percentage of them are likely to have moved in front of you, but you don't actually know for sure. Okay. So what MBO does instead is it doesn't say there are 1,300 orders. Instead, it says there's a 200 lot, there's a 400 lot, there's the bunch, all of these 100 lots, and they all have IDs. And then if one of those lots changes its, cancels, I will get an update. I'll say, okay, this lot canceled, right? Now my software can know exactly where I am in the queue. Okay, so that's the main purpose behind MBO, is for algorithmic trading programs to be able to know exactly where they are in the queue, and they can decide whether to keep their orders or pull them based on that. That's what MBO is all about. Okay. Now, MBO also allows you to do a couple of weird things. One of the big things is that, excuse me, MBO allows you to detect stop orders being triggered. It doesn't allow you to see like stop orders resting out there, but when an order converts from gets triggered and converts into a market order, you can see that, because basically what you will see is a market order hit the market that is an update instead of a new order. If it was an update instead of a new order, that means that it was a stop that was converted into a market order, right? So that's another interesting thing that you can do with MBO data. Can we use that information to possibly predict future flows? Maybe. Somebody did a study where they took the MBO data and fed it into a machine learning algorithm, and they found that the algorithm performed better with MBO data than it did without it. But that's awfully preliminary, right? Most retail traders probably will not get a huge benefit from MBO. And you got to realize you're paying like $100 extra to get the MBO. So for most retail traders, it doesn't really make sense. But it is a thing. There's some cool stuff about it. I'm just kind of looking at what the different markets are doing. I'm seeing oil kind of turn down here. Oil is the biggest loser on the day. Also, wheat is kind of doing pretty bad. Silver, RTY. I find it very curious that, we saw yields back up quite a bit, all the way back to 4%, in fact, and gold and silver are selling off as well. I think that gold and silver seem to be more sensitive to China than we realize. But I wonder if they're also saying that, like, well, no, that wouldn't make sense, because if it was like, oh, they're just going to pull back and like stimulate the economy even more, shouldn't gold and silver be like really rallying hard in that situation? Wow. Hold on. So we've kind of been following the election here. In the New Hampshire Republican primary, from coefficient poll 0805 to 07. So just a few days earlier in the week, 862 likely voters. Trump 43%, down 4% from June. DeSantis 9%, Christie 9%. Haley 7, Scott 5, Ramaswamy 5. Those are all quite odd because an undecided increased 3%. So Haley gained, Scott gained. Haley gained 4, Scott and Ramaswamy 2. And then Trump and DeSantis both down 4%. So what is happening essentially is that the Republican voters are just splitting across the field more evenly. And I would say this probably is very reflective of how I thought that the DeSantis team had a lot of really professional people working on their team and like a really good plan and everything. But what it looks to be happening to me is that their campaign team is like getting punched in the face and they're faltering. They're not able to deal with the adversity whatsoever. So that's a fixable problem, but he's going to need a turnaround essentially. And it's just really weird to be talking about this kind of level of like campaign story before the summer is even over. Well, the treasuries came back up there pretty hard, although there hasn't really been any meaningful change in cumulative delta. So I guess there was a shift in the dollar there. The dollar shifted back up. Financial juice, long dated SOFR downside remaining popular. So in other words, the SOFRs are kind of also going towards the, I wouldn't want to say in recessionary, but like that the Federal Reserve will back off. The bounce off of 14. I mean, it looks really, really closely correlated with the dollar, so I don't know. The correlations are a little bit odd today, right? Things aren't, if I'm seeing treasuries move up, I would expect to see gold and silver also moving up, and that's not the case. They're down overnight, for instance. I think DeSantis did one thing well last night in his interview when he said Trump handed over the government to Fauci, independent of my politics. I think that's a line that would win with voters. Yeah, maybe. I think you have a good, I think that his larger point that he was making when he said that is really well founded. Donald Trump came in saying that he was going to drain the swamp. He always said that he was going to drain the swamp. That was like something from day one. And I would say that the swamp won. I feel that the swamp is more powerful today than it ever was, because the way they're going after him in some of these court cases, maybe Trump is his own worst enemy in some instances, but some of this prosecution is just ridiculous. Just absolutely ridiculous. Like suing him because, he says that there was election fraud that changed the outcome of the election. And some of his advisors disagreed with him, but he still had that opinion. That's to sue over that is, to call that a criminal conspiracy is just insane to me. Just so insane to me. It is so obviously political. It's political prosecution, and that sort of a thing really bothers me when it turns into the court system becomes a weapon that we can use against our political opponents. That's that you're going down very dangerous grounds when you go and you do that sort of stuff, right? And, you know, in the past, you would have to be, you know, maybe that political prosecution of enemies was happening, but you kind of had to do it in a way so that people weren't too concerned about it and it wasn't so obvious and it wasn't talked about. And now they're so brazen. It's just so brazen. Everybody in the country knows that it's just a political prosecution and they're doing it anyways. So I would say that the swamp is more powerful than it ever was. He lost. And so I think that DeSantis has a really good argument coming in and saying Trump is clearly incapable of accomplishing the thing that we're concerned about. But I'm not entirely sure what the thing is that is kind of leading to DeSantis's decline. I think that probably a lot of it is just expectations, right? Like people want to see the campaign is doing well, it's gaining momentum, his numbers are going up in the poll, everybody bandwagons. You know, Republicans are just as vulnerable to that stuff as Democrats are. And you know, it's in the summer. It's like your ability to actually come out and do that sort of thing is kind of limited anyways. And I don't know how it's going to turn out, because what I still see is a Republican primary that's going to be very, very ugly, but an electorate that seems to be coalescing behind Donald Trump more and more. So okay, so back to 18, they kind of recovered whatever that big dip was. And again, it seems to be driven by correlations because, like, when I look at cumulative delta in the 10-year, for instance, it's still short. 5 years, still short. 30-year, I mean, like, they pulled back, but it's not nearly as much as what had sold. So from that, I would have to conclude that we're moving up primarily because of correlations. And the only thing that I really see strongly correlated with this right now is the dollar. Like the Japanese yen itself is not really very strongly correlated. Gold and silver kind of aren't going along here with it. It looks like it's the dollar. So unless I think I know what the flows are going to be in the dollar, that's a good reason for me to not get involved. Right? Well, bank stocks slide after Moody cuts ratings on triple whammy of factors. So let's come over here and look at Goldman. How much did they get impacted by this? I mean, good Mary. That's a pretty big down. That's a pretty big downside candle for sure. This stock has been struggling for a while, though. Maybe JP Morgan. JP Morgan down really, like that's a big gap. I took a short earlier on the bun, rode all the way down for 12 ticks and it reversed. Yeah. Well, this is like in a market like this, if price and market orders are not correlated with each other, then that means that, like, if you do catch a winner, like the amount that it tends to come back on you tends to be more. It's harder to get a really good clean spot, you know. It's just like everything is harder. That's my experience with those things. You know, it took me years to figure out, like, they're just not worth messing with, you know? The delta was very negative. Yeah, the treasuries is still net sell, even though we've come up here. So this looks like the dollar is driving them. Now that could flip around. Something that we might be able to say here is that if we continue up into these highs, we could continue to see a rise here, and some people having to start stopping. Oh, in fact, dang. I was starting to think about trying to take 398, and there was just a really big uptick at 20, where they cleared out 1,800 contracts and then put a strong bid behind it at 20. I'm just getting tired of a few ticks more instead of cutting in reverse. Okay, well, with that particular trade right there is also kind of one that, so if you have a big trade right there, that could potentially become a node that prevents them from going right away. It's not the most effective price, so I'm gonna hold off a little bit. The S&P 500 is selling again, so we could say that there is, you know, the risk sentiment. It also looks like the 30-year is kind of affecting the curve a little bit more heavily. Okay. They're trying to sell it, and they're kind of running into a wall there. S&P does not look happy. There was a brief second where I could have got 398, but I wasn't fast enough. Okay, so the sell-off, as the three things that happened overnight that we believe are driving the sell-off in the S&P 500 was Moody's downgrading this bank stocks, a windfall tax imposed on Italian banks, and dismal Chinese trade data. Okay, well, I really would have preferred 398, but I did catch the edge on that, so that's okay. So we'll see if this little bit of further upside really flips the orders around. I'm definitely seeing the buys come into the 10-year here by about 5,000 contracts so far. I think that there could be a lot more because I don't think that they've even begun to puke. In the meantime, shall we read the Zero Hedge Story 7 trends that indicate economic disaster is approaching very quickly? The economic meltdown that is coming should not be a surprise to anyone. Throughout U.S. history, there have always been signs that a major downturn was coming, and that is precisely what we are witnessing right now. Tax revenues are way down. Demand for trucking services is way down. Demand for cardboard boxes is way down. The money supply is shrinking at the fastest pace in modern history. And the Conference Board's index of leading economic indicators has already declined for 15 months in a row. At this point, anyone that cannot see what is coming has got to be willingly blind. Well, I don't know. I don't know if I agree with the willingly blind. I mean, there's still a lot of contention in the market, but I do find it interesting. I was watching a friend that kind of posts some economic stuff, and they were gloating about how high the economy was, the stock market was up this year, and I was kind of like, I don't know if this is really a very good time to be saying something like that, because you may well be posting on the very top, right? Anyways, okay. Number one, excuse me. When economic activity slows down, less tax revenue comes in. Right now, federal government and state government tax revenues are declining precipitously. U.S. state and local governments just experienced the worst decline in income tax revenues ever recorded. This was the second steepest year-over-year percentage decline in history, with only the Great Financial Crisis having a worse outcome. Note that the federal tax receipts are also dropped again, now at recessionary levels and approaching negative 10% on a year-over-year basis. Number two, when the economy slows down, trucking companies see less demand for their services, so it is deeply alarming that truck freight volume and spending absolutely plummeted during the second quarter. Truck freight volume and spending in the second quarter of 2023 declined by the highest levels since the early days of the pandemic. The latest U.S. Bank Freight Payment Index revealed spending by shippers dropped 10% compared to the second quarter of 2022, while shipment volume dropped 9%, according to a statement from the Minneapolis-based bank. Employment is supposed to be the bright spot for the economy, but the latest employment report shows that the U.S. actually lost 585,000 full-time jobs last month. One look at this month's adjustment, and it's literally a shocker. You will not hear from anyone from the Biden administration or Associated Economist cheerleaders mention this, but the BLS reported that in July, the number of full-time jobs plunged by 585,000, the biggest monthly drop since the COVID crash. U.S. employers have already announced more job cuts this year than they did in all of 2022. Well, of course, with 2022 as your comparison. CVS Health said on Monday it's going to cut approximately 5,000 jobs to focus more on healthcare services for its customers. The move, which is supposed to help the economy save money, will affect workers primarily in corporate jobs, the Wall Street Journal reported. Thanks to rapidly rising interest rates, monthly costs for new home buyers are almost 20% higher than they were a year ago. This is absolutely crushing the housing market. The fact that delinquency rates for commercial real estate mortgages are skyrocketing is yet another sign that we are in the early stages of the worst commercial real estate crisis in all of U.S. history. The delinquency rate of commercial real estate mortgages on office properties that have been securitized into commercial mortgage-backed securities spiked 5% by loan balance in July, up from a delinquency rate of 2.8% in April, having now spiked by 2.2 percentage points in 3 months, by far the biggest 3-month spike in the data going back to 2000, and by 3.4 percentage points so far this year. That's Barkin speaking at the moment, I guess. The share of the U.S. population that cannot afford a $400 emergency expense continues to go up. Well, so I should try and make the counter argument here. I think the counter argument here is that I am starting to see some hints of some weakness in the economy, and that is actually in some respect a good thing, because I still feel that the biggest risk that we have is inflation coming roaring back. If we don't see inflation come roaring back, and in fact we even see some deflationary activity, the Federal Reserve can reduce interest rates, and if we're able to reduce interest rates, then you can see the economy do really well and withstand that. You might see a little bit of a decline, you might see a little bit of a pullback, but in the end, you would actually avoid a full-on recession if things cool off at the right time. So all of those bad things are not necessarily like the end of the world, right? Plus, there are some things that we see in the economy that still look strong. The stock market looks strong, although certainly not the last 3 trading days. And consumer spending has been really good, although we'll see if that continues. If we're really on that path, I think the next place that we're going to really we'll start to get hints that there's more of a problem is in consumer spending, right? Oh no, what are you guys going on since I've been doing that? Now we're selling on China. I do think when China data is bad, the rest of the market definitely moves down. And a lot of the growth that we've seen in stocks has been because of demand from China, yes. My take on it would be that you have to think of political parties as loosely associated groups of people with the same incentives and goals behind them. I think that everybody thinks that it's all about their ideology. Go out and read what the platforms for the different parties are and see what matches up with your values the most, and then that's the party that you should go and join or something like that. It's nonsense. That's not how politics actually end up functioning. People look at what is going to be most beneficial to them personally. They might not even realize it. It might, sometimes it's totally subconscious, and then they justify their decisions afterwards with what seems like logic to them. That's the way that most people work. This is why so many far left ideas and approaches these days have been failing, because the left still believes in this kind of like this logic approach to things, right? Think about logic versus empiricism, okay? Like, the reason that we've been able to build the society that we have is a reliance on empiricism. We're letting the data guide our decisions. So the left thinks, okay, we have an idea, and if the public rejects that idea, then that just means that we didn't present it well, right? They'd never sit back and say, oh, maybe the public is rejecting it because those things are objectively bad for the majority of people. Or at least for those demographics, that thing is subjectively bad for them. That's the way that it works. And so because they're not, because of this idealized idea of how people and ideas work, right? They will constantly end up going down rabbit holes, idealized ways about managing the world that just don't work, right? Defund the police probably being the best example, right? If you want to have like success, if you want to pull people out of poverty, for instance, then the best thing for you to do is to have vibrant small businesses. How are you going to have vibrant small businesses when people are, running around rioting in the streets, right? And breaking in the windows of that business and driving away customers? You're not, right? When in New York, the approach that they took was they were just extremely aggressive policing, and they sent the police to the areas that had the crime, and they basically turned downtown or Manhattan into like Disneyland, right? And then the Democrats came in and got rid of all of those policies, and now it's like as bad as it's ever been. So that's the first thing is, okay, so we need to have low crime and a lot of economic incentives. You have to set things up in order to incentivize people to do those things. And what's one of the best ways to do that? Well, is to have strong punishments in the law. If people break the law, It sucks. It really sucks, so that they have a really strong incentive to not break the law. A lot of people think that the law is there to protect you, or it's there for your benefit or something like that, right? Well, I mean, in the larger scheme of things, it is. But really, at its base level, the majority of police enforcement is about maintaining order so that we can actually have that good societal economic growth. Right. Minimum wage is not like a new topic or anything, and it's been months and they only talk about that. They could do that any time in the previous. Well, no, I mean, the minimum wage issue is I think a really interesting issue to me, just because every time that it's been brought up in the past, like since 2008, really, it's been a really bad time to raise the minimum wage, you know, and so now we are like really far behind. Like the minimum wage in some places is still like $7 or something, which is ridiculous, right? Now I don't think that they should really increase it to like 15, but like, you know, the minimum wage is a lot lower than it normally would be, right? But there's kind of this whole issue that you have, like one of the mistakes that liberals make when trying to argue the minimum wage is that they assume that everybody agrees with them on what the original purpose of what the point of a minimum wage is, right? Like I think it was FDR that said that, you know, we need to have a minimum wage so that everybody can have a living wage, right? So if the purpose of a minimum wage is to give everybody a minimum wage, right? Well, just because that's what FDR thought doesn't mean that that's the right thing, or that everybody agrees with him, and that there's not other reasons to have a minimum wage, right? Like, I kind of feel that you do want to have a minimum wage to avoid exploitation. There is a certain point at which you're paying people so little that you're literally exploiting their labor, right? But there's this other side, which is that not all jobs actually generate a living, right? Like, what you make is based on supply and demand, and yeah, there can be situations where because of supply and demand, the labor that you're doing on that thing is not worth a living. It's just you just can't force it to be that way. It doesn't change the underlying supply and demand dynamics. You're just creating a market imbalance, you know? So maybe we should have increased the minimum wage, but then, you know, they're saying, well, in order for it to be a living, it needs to be like $20 or something, and then right, and then you have to get into this whole other argument, right? Oh, you can't do it without acknowledging its disadvantages. By the way, that downtick there wasn't particularly good for us. So I got in anticipating a break, and so far they have backed off. I think that there could still be some long orders here, but so far I think I would have to say that my execution there wasn't very good. Because I could have waited, come and be trying to catch 399 instead of the 398 that I took. This is a little bit more speculative of a trade than I would normally take as well, because I am kind of banking on the continued long flows ends up causing stops above this and more frantic action above 22. In Italy, there's no minimum wage? Oh, okay. Oh, sure, yeah. When you have a minimum wage, it basically it eliminates certain jobs, yes. And it creates inflation. I honestly believe that a major factor behind why inflation was chronically low in the post 2008, between 2008 and 2000 or 2020 rather, was because they didn't change the minimum wage. I just can't help but see that correlation. And then, of course, COVID created such high changes in cost of living expenses that then you did get the wage increases. So it kind of looks to me like the orders might be there, but the market makers seem to be okay with taking the orders on the offer. So S&P 500 still looks pretty sad though, doesn't it? Like they've backed off, but not very much, and I'm still seeing a lot of selling. Wow, two ticks down there. I mean, it's kind of an impossible to solve problem, right? Because you do need regulations. People do need to be protected. The market's not perfect, right? But like which ones are good and bad, and what's the proper way to do it all, right? But once we start to get dogmatic about it, then that's when you end up running into real problems. Like if you take the libertarian approach to things, like a libertarian, there's been a number of instances where people tried to create a libertarian community and they just always end up being disasters, And you take it the other way. We've seen what happens the other way when the regulation gets so hard that it just becomes impossible for new businesses to spring up, and it becomes impossible for small businesses to thrive. And how do you create a system that will actually result in good, proper regulation? Is really the real question. Well, one thing that I'm pretty confident about is that the more of that decision making that you put into the local communities, probably the better. You want to get the decision making to the people that are closest to the people that are actually affected by it. Okay, so tiny pullback there. Some signs that they maybe want to hang out around 18. Kind of odd timing too, by the way, 812. what are we seeing over here in the dollar? The dollar continues to push up. In fact, the dollar is having a really crazy spike there. That's curious though. Like the treasuries followed the dollar up for most of that, but they did not follow the dollar on that more recent spike up to 102.57. You have a friend that gets mocked when his wife drives the car? Okay. We have to go into statistics on driving cars between men and women because the statistics on driving cars are really super interesting. It's actually a really complex topic, right? Because men have like the better like spatial motor control and all of those sorts of things, but they also take on more risks. So men, I think that the statistic is actually that women have more car crashes than men, but the actual like monetary damages, like the amount that insurance has to pay out, is much more for men because their crashes are more severe. You take lots of risks. That's good. I mean, I think if there's any skill that's going to help you become successful in life, it's going to be knowing how to take on good risks. Right? There's this one creator on YouTube that I watch a lot, and he recently mentioned that he was recently diagnosed with ADHD, which I thought was kind of weird because I thought that he had already been diagnosed as a kid. Like he said something that made me think that he was diagnosed as a kid, and but I was just kind of reading between the lines. And but how was he successful? Well, he's really good at taking risks, man. If you're an ADHD person, you take risks, sometimes. I don't know if I would strictly say that women are better traders overall per se, but the way that men trade and the way that women trade is different, and there are some significant advantages to the way that women trade. Or at the very least, if I were to do an experiment and I took 100 women and I took 100 men and I taught all of them, like, you had them all watch my channel and then go out and try and trade for a year, I'm going to bet that the women would do better. Simply because the women's approach to risk is a little bit more cautious. The women would probably lose less in their first year than the men would. But there's downsides to it as well, because usually what happens is women will kind of reach this barrier. Like at an institutional level, when you get women traders, there's usually like this ceiling they reach where really for them to really make the big money and really become really successful traders, they need to take on more risk, and they're just too reluctant to do it. You were watching one of my live streams from the COVID crash? Oh dear. I hope I didn't say anything too stupid. The whole evolution of the channel during the COVID thing, I think, is a little all over the place when I think back on it. Not that I've gone back and watched videos. I remember one day in particular, like early January, where I was joking about, oh, they're going to lock everything down. You won't even be able to go to the supermarket, etc., like saying what things were like from the future. As a joke to say, like, I think that you guys are being a little bit crazy about how extreme you think this is going to get. But like everything that I said, that's like exactly how it went. I think women historically have a harder time getting onto trading desks, and only the best survived. Well, that's a different issue, though, NJ. That I don't think has so much to do with their performance. Yeah, this is a difficult topic, man, because the reality of it is that the culture on Wall Street is not very well suited for women. It just isn't. I'm not. I think that a lot of people would say, you know, okay, that is a systemic imbalance that we need to address and fix. I'm not going to go that far. I don't want to sit down and say what things should be or shouldn't be. There's advantages and disadvantages to everything, but it is absolutely the case that the culture on Wall Street and the culture on a trading desk is generally not favorable to women. Okay, the men, particularly in the trading world, are very competitive, and women are on average are not as competitive. They're not as competitive. They're not as aggressive of risk takers. And not only that, but there is definitely that kind of like old boys club, almost misogynistic kind of culture in Wall Street as well. And you know, part of that is just the guys working with only guys all day, and they created a culture that was very male, you know? And so, yeah, you have a culture that's so male, and then you try and put women in it, they're not going to do as well. Should the industry change to accommodate them? So like I said, I don't know if I really need to take an opinion on whether it should change or not, because I think the reality is that they are trying to change it, right? And so it would be better for me to say, you know, their goal is for them to change it and make things more favorable for women. What are some things that they could do to change that, right? Rather than to try and make some moral judgment about whether it was okay or not. The only reason that I say that is that, like, I think personally, just I know that some people may dislike me for this, okay, but I think it's okay to have some spaces that are just for men and some spaces that are just for women, okay? And in fact, I think that it is beneficial for people in the society as a whole to have some places that are primarily for men and are primarily for women, right? The question is, when is that actually appropriate? Right? Like, I think definitely that the Boy Scouts of America, that should be primarily an institution for men. And I don't think it's a good thing to change the Boy Scouts of America to make it better for women. Right? And there are female organizations out there as well that are very much female. I don't think that Mary Kay should go and change their entire corporate culture to appeal to men more. I think that would be dumb. I think that would like ruin the company, right? I think that Mary Kay is better. I mean, you can be a man, you can go and you can do that stuff, but let's just admit it. Like, women are going to function better and be more successful in that environment on average than men, because it's just better suited to women, right? The issue when it comes to finance is you're talking about something very, very important, right? You're kind of talking about like the basis of our society and how capital gets allocated. And if it's only being allocated by men, will that result in certain kind of societal imbalances that are negative for the society as a whole? I think that's certainly feasible, although I don't have empirical data to like prove that. But that's the conclusion that other people have made. So my position is, okay, that's above my pay grade, but I can tell you from being in those companies and understanding a little bit about the differences between men and women and things like that, to know how you can kind of improve that environment. I think that female sports should only be for biological females that have been biological females their entire life. I'm sure. Like I'm just straight up telling you, like, okay, when I worked for Goldman Sachs, I feel like I just had so many great female friends when I worked there. You know, I think part of it was that, like, I was married young, well, relatively young. I mean, it was like I was like 25 at the time or something like that. But you know, most of these people these days aren't getting married until like their late 30s, right? So most of these women were single, and I was married. And you know, women will absolutely, if they find a guy that's married and they know that that guy is safe, they're going to be more open with him than the single guys, because they're too concerned about the single guy is trying to get in their pants, right? You know, assuming that it's really a loyal married guy and all that sort of thing, right? So I think I had a lot of good female friends because of that. And I wouldn't say that a woman could not be successful at Goldman Sachs or anything like that. But there are definitely culture, and I think it's worse at Goldman than other firms. There is certainly some cultural points that might make women uncomfortable, or, you know, might make it hard for them on certain desks. There was like that whole lawsuit that they had a little while ago, you know? I'm sure that everything that she said, I can totally see that. Yeah, and you know, there's this thing where it's like, I think one of the things that's really devious about it is like I said, again, it's kind of like an old boys club, and it's a very competitive club, right? But if you as a woman do the things to try and fit in with that culture, for instance, being an aggressive woman that's very competitive, it kind of works against you. It kind of works against you because of the larger societal ideas about women. Like a lot of people don't like aggressive women. You know, which I don't think is right, but it's a very difficult problem. I think that if you're going to go and work at it, you know, if you're a woman, I would say absolutely go and work for them, but just realize that there are some problems there that you're going to have to deal with, right? There's nothing that you can't overcome, but there are problems, right? Personally, don't believe that they have to deal with higher levels of stress. Competition at those levels is stressful, and maybe they are not as equipped to deal with stress as men are. Yeah, well, you know, I don't even know if it's so much stress. I don't know. Stress is a really weird thing. I'm not sure I completely understand why one individual thing might cause one person more stress than another person. I do know that one of the things that kind of will stress you out is when there's something that you feel like you need to do, but you can't, or you aren't dealing with it, and that can kind of cause stress. But the thing that does happen at the banks, okay, is they basically expect you to invest your whole self into it. Okay, if you're going to be an investment banker, that is such a busy job. You know, of course, it can of a job that somebody else that you get paid a salary to do. That's going to make the most money out of anything, right? Is the investment banking side. And they expect a very high level of performance, and the people that do that sort of a job, you know, they don't go home at the same time every night. They're usually in the office late. They're usually, you know, they invest their everything into it, right? And that kind of percolates throughout the rest of the organization, right? When it wasn't like that in Salt Lake, but when I went to New York, most of my friends, they stayed at the office late. They would work late, they would go out with friends and eat out or drink and then go home and go to sleep. You know, they were not getting home at 5 o'clock and spending time with the family. That wasn't them, right? And again, like, you can say it's good or bad. That's just what it is. There's plenty of women that are willing to do that these days, though, so. Yeah. I personally don't think that kind of approach to your job is really very healthy. I don't think that the majority of people should do that, but for some people, a certain group of people, they are going to do it. If it's just about competition, and it is, and many men are just more used to it. Yeah, that's true. One of the things that I will find will happen to women is they'll go into a male-dominated space, and then they'll get pushed back. You know, like if you're a woman, you get on social media, and you become an expert on a topic, and you start sharing commentary about that topic. You know, immediately you're going to get these men that come in and say, well, like, that's wrong, or you don't know what you're talking about, right? And then the woman will say, oh, well, why is it all of these men are trying to gatekeep me out of the, you know, contributing and this and that? Well, it has nothing to do with if you're a woman. The reality is that every creator gets that kind of pushback. It's just that men are used to it and you're not. And there are some men out there that, because of the way that the culture has been going, that they encounter that competitive culture and they don't know how to deal with it. Right? But I still kind of have to differentiate here on my approach to things, because the way that most people would approach this sort of a thing is they would say, okay, if you go and you work at this job, it's this way, and I don't think it should be that way. Ergo, that's wrong and we should change it. Or that, you know, you can even go as far as to say that that's a moral issue that we should address, right? And my approach is that I don't think it's very useful to people to be making that kind of judgments for them. I can only say what is, and you can determine what your own goals are, and I can tell you based on your goals what are the things that would be the most effective, right? You know, a lot of people don't like that. Like, I've gotten into this thing on TikTok once where, you know, there was I would say like hardcore feminists types, you know, pushing in a certain direction, and it's just like, well, okay, so you have some goals, you want to make some changes, okay? Here's how you make those changes. They don't like that. They don't want to hear. They didn't like hearing what would actually be necessary to make those changes, because sometimes what you have to do to make changes in a system or in politics is a little unsavory, you know? So that's why I'm kind of being a little bit cautious here about it, because, you know, you got to understand that it's not me making a judgment. It's you know, I'm a resource. How do you get done what you want to get done, right? How are things actually are. And I don't necessarily benefit you from trying to impose my own set of values on people, because my set of values is the more that I can spend, you know, make all of the income and my wife spend time focusing on the children, the better off you're going to be. And that's my approach, and that's not what everybody wants, right? Okay, well, we did have a little bit of a bounce back up there. They didn't make a new high. We've come back to this 18 area. It looks pretty quiet. I'm not sure if anything super significant is going to happen. I'm not sure anymore if the appetite, like one of the things is that I'm not seeing the cumulative delta come in long yet. For instance, there does appear to be some risk off sentiment out there, but I totally agree. Those who aren't used to competing / taking criticism will tend to take things too personally. Well, and not only that, but okay, this is another issue that we have in our society that I think bothers everybody, really. Okay, is that social media doesn't treat you as people. The algorithm doesn't care who you are. The algorithm just does what it's told by the programmers, and the things that it's optimizing for, in my experience, are not what is optimal for you, right? This is the same thing at a company. Their job is to make the most money, and the more work they can get out of you with the least pay, the better it is for them. People aren't used to being treated like a data point. They expect to be treated like their family treats them, as an individual with nuance about everything about their personality and how they might react to things, and how can we do things and make decisions that would be best for you. And most of the world doesn't act that way. And one of the biggest issues that I think millennials have had dealing with is going out into the world and being surprised by that. Like past generations knew that the world was hard and they expected it, and millennials, they expect the world to cater to them, and they feel that something is unjust is being done to them when they're treated like a data point, when the reality is that's just kind of always been the way that it is, right? The solution here is that you have to realize that the only person that really truly ultimately has your best interests at heart is you. And of course, your family and close friends can be that as well. But especially when it comes to business, you have to look out for yourself, and you can't rely on the business to do the right thing for you. I don't think that everybody in the millennial generation understood that, and as a result, some of them are a little bit behind where they would be, where other generations would be had they not made those assumptions. So they thought, oh, if I just sit here and work hard and everything, they're going to see what I'm doing, and then they'll do the right thing for me, and that's not how it worked, right? That was really veered off into the I'm thinking back at, okay, how did I get to the point of talking about this? You can tell I think about these things a lot, right? really what this comes down to is having been divorced and then going back into the singles scene in Utah for Mormons and seeing all of the problems with it and learning how to navigate that successfully, and so when it comes to issues of culture, society, gender relations, I have a lot of opinions about it, but I also have a lot of I've learned a lot of things, and it's kind of hard to relate to people what I've learned in a way that they won't become defensive, right? Because I think that my solution to things was kind of the same solution that I take in trading, right? I can come in and I can say like the S&P 500 shouldn't be declining right now, which I don't believe, but let's just say that I did, right? Does it really matter if I believe that it should or it shouldn't? The reality is that's what the orders are doing, right? And so we come in and we do the things that either according to the data that we have or to our best understanding of the market are going to be the things that are going to work out the best for us, right? And we have to take that approach, and sometimes that means kind of being a little bit cold about like what are the consequences, because you're going to come in here into the market and you're going to see times where the market is doing crazy things, and that you're long treasuries, but that like people's livelihoods are just getting demolished during the crash and everything, right? But it is what it is. There's nothing you can do about it. You can only come in and make the decisions that are best for you and the goals that you're trying to achieve. Since you started trading, you changed your view on so many things. More stoic. I definitely feel you kind of have to adopt a stoic mindset to trade. It takes a weird kind of person to trade, because the reality is, in my opinion, that the amount that you have to train your brain in order to trade effectively is really something else, and only certain type of people are going to be willing to stick it out through that and not see any success, You're much calmer than before. I don't know if I think I'm the same. I think I'm much more aware of So like one of the things that I think is the weirdest thing that I've discovered as trading is that humans on the whole don't seem to be very aware of what their emotions are and how their emotions could potentially be impacting their behavior, right? It seems that emotions are like nature designed emotions to be automatic. And that works for most situations, but when you have to be intentional about things, that's a big problem. And so you kind of have to be able to step back out of that and say like, I don't feel scared, but I'm probably not aware of it, right? And so it may be affecting my behavior and I not realize it, and being able to effectively compensate for it because you know yourself well enough, even though you might not strongly feel it, Complain way less and tend to look for a solution more. I still complain a lot, don't I? I feel like, especially when I'm losing, I think I can still get pretty complaining about it. It's hard. Like the thing is that even at the end of the day, if you're doing everything that you're supposed to, sometimes it just doesn't. Yeah, hold on a second. I got something's coming up here. Yeah, sorry, I was just talking to somebody at work. They were messaging me. Pulled me in. But we're okay. We can keep going until the top of the hour. Lucas says I disagree. I wasn't saying anything at the time, so he must be messing with me. Well, it seems like it's kind of settling here at 18. Yeah, it's been like that for the last 15 minutes. So, I don't think that you can train your emotions per se. Like, I think that instead, what you can do is you can be aware. And you can kind of like redirect your emotions, but like trying to like suppress or like manipulate your emotions does not end well usually, in my experience. Like if you try and suppress your emotions, what happens is you're just kind of bottling it up, and eventually it will come out. And when it comes out, you have no experience in dealing with it, right? Yeah, it seems like the last 15, 30 minutes that the markets overall haven't done a whole lot of anything interesting. The S&P 500 is maybe turning back down. Why would train equals suppress? Well, because that's when you say train, that seems to imply that you could in some way decide what kind of emotions you want to have at certain times and stuff. And that you could train yourself to feel a certain way in a certain situation. And I don't think that it really works like that. It's more like you manage it. That's like the way that you have to approach this is that you are not your emotions, right? You are a separate entity that is out there above all of those things and is able to observe all of the things that are going through in your mind. And so you can be aware of what the emotions are and still be feeling them, but still be able to make rational decisions and do things correctly. And or understand when you're to the point where you really have just lost that capability so that you can walk away. So it's when you say train, that's like the same thing as that you have some control over it, right? But I don't think that that's what it is. If what you should be training is your awareness of your emotions, right? Oh, that AC turning on, that feels good. It is because you can't change the emotions that you feel, but you can change the actions that you take as a result, right? That's not suppressing. You can still, so like I have a sensitive valgus nerve. So like sometimes if they're like drawing blood from me, my body can just go into shock. I don't have any control over that. There's doesn't matter how much meditation or work that I do on trying to control nervousness around it or anything like that. Because when I pass out, I'll be talking to the doctor that's taking my blood in the same way that I'm speaking to you right now. But my body still has that reaction, right? And your emotions work in similar ways. These are chemical reactions that are occurring in your body that are involuntary, frankly, right? They're involuntary. So the idea that you can in all instances control your emotions in terms of like what you actually feel is ridiculous. It's frankly, it's a delusion to think that you can. That if you think that you can, then it probably means that you have just not really been in those situations before where you've really tested yourself, right? So you cannot control the emotions, but what you can do is you can compensate. You can say, okay, I'm probably feeling nervous right now, and when I get that way, this is how I might tend to behave. And so I need to factor that in to my current decision-making process in order to ensure that I still make the correct decisions according to how I feel that I should trade my trading strategy, right? That's not getting rid of the emotions or changing or controlling them, but it is being aware and still being able to make good decisions even despite what your emotional state might be. It's a big order at 17. It's a little bit of iceberging going on. Seems like there's something going on here. It may yet do something, but I'm kind of wondering if it's just going to take, like it might not be until after the European close that the treasuries do something interesting again. That's not the case at all. You do whatever you think you should do despite what you're feeling. It's a form that's not suppressing what you feel, because the emotions are still there and you still feel them. Again, like emotions are like chemicals, right? Like, if you've got some real adrenaline going, you can't just, you saying, I don't want to feel that anymore, doesn't automatically make all of the adrenaline chemicals in your blood just evaporate or something. You can't just will it away. Doesn't work that way. Yeah, well, okay, so if you're trying to manipulate your emotions through drugs, it's never that simple, right? Because there's always side effects and so forth that you get through them, right? Like, you can use Adderall to increase your focus, but Adderall can also make you more nervous. I think the reason that this comes up in trading is because a lot of people will tell you the opposite, right? A lot of people will tell you that the way to be successful in trading is to be able to learn how to control your emotions and yada yada. That's why people lose, is because they don't have, this is kind of like the I wouldn't say that this is what Mark Douglas is saying, but a lot of people that kind of like him, that's That's kind of what they're thinking, because that's what they think. It's because they don't have a real edge, right? But again, the market doesn't care how you feel, right? What matters is, despite how you're feeling, that you make the right decisions. But you got to realize, I mean, this is a thing that a lot of people, I think, have struggled with. Is you have to realize that there are some things that are kind of like out of your control. Like, you're gonna feel a certain way in certain situations, and like that's the way that your brain is wired. And if your medulla, like your emotional memory down in here, gets triggered by something, I mean, this is how like PTSD and these sorts of things work, right? So this is like just as ridiculous as saying that, well, you know, if all people with PTSD have to do is to just will themselves to not have PTSD, it's ridiculous. And all traders, I think, by the time you become successful, you've already kind of gotten some emotions. Every trader has PTSD to some degree. Okay. Yeah, I mean, once you have an edge, then the emotional thing can kind of come into play. But all right, well, I got to get going here, so I will see you guys tomorrow. In the meantime, stay excellent, team.